Hi, good evening. We'll start in about 60 seconds. Were you all able to see my screen? Hi, Alish, Naveen, Neetu, Harshit, Vignesh. Hi, how are you today? How's the market treating you guys? Did you guys make money in trading last week? Yes, Tarun, very unpredictable. Oh, is it? Okay. I thought traders would have made a lot of money last week by buying low and selling at a higher price. Jai Shankar, that's a good way of saying, I don't know whether you gain, but yeah, how to make money, Neetu? Okay, how to make money is a big $1 million question. For some time you have to work, but after that money will work for you. Great. I'll talk to you. I mean, please keep asking me questions. I'm very interested in this topic of making money, psychology, and what kind of importance that mind plays in games. So please feel free to ask me questions during the session. Don't hold back. Ask me as many questions that you have. This is the last session of Morning Mogul, where I'm going to talk to you about something which I've coined myself, I believe, right? So, we will continue more live streams, but Money Google session as a part episode is coming to an end today. And I really thank all of you who actually could join in for all my episodes. And it'll be great to have your feedback. Please keep asking me questions about, yeah, I can see questions flowing on LIC, which stocks buying. I have covered those things also in my previous episodes. I will try and address those also today. So, what do you guys think of the market? I mean, what do you guys think of the win that we had yesterday, that India had yesterday? The results that we had for BJP, 4 out of 5 states, and up one out of 5 state, right? So, what do you guys think about it? Please keep your thoughts and questions flowing. I will start with my presentation today, which is not investing in equity is risky. I'm just going to start presenting my screen. Let me know if you guys can see it. Are you able to see my screen? Is everyone here? Okay, Tarun, wonderful. Now, can you see this not investing in equity is risky? Sorry, I'll have to toggle. Okay, Vivan, let's go ahead. So as I said, this is something which is coined by me is what I believe, but yeah, correct me if I'm wrong. What I believe, what I hear from people wherever I go is that equity है बहुत risky होता है, equity में डालने से पैसे नीचे गिर जाता है, डूब जाता है and all that stuff. But I've always figured out that investing in equity is always good and not investing in equity, in fact, is risky. I have handled portfolios of various clients who have been very traditional in their approach by investing in FDs and a lot of traditional debt products and LICs and stuff. But what I see as a result is that their portfolio is not good enough for them to take a call on retirement. That is a very unfortunate situation. And that's when I thought I should just touch base upon this very important topic of why every one of you, each one of you, should invest in equity. Let's start. So, what is the myth that everybody has? You go to parties, you go to events, functions, marriages, and all that stuff. And let's assume that you are an investment manager. People always say that market is बहुत volatile है. Market keeps going up, guy rates ups and downs, like what we have seen in the last, 10, 15 days now, thanks to Russia and Ukraine. But people consider that volatility means risk. But on the other hand, if you actually think of it, Volatility also produces a lot of opportunity. Just because an asset is going up and down in the price, does it mean that the asset is bad? What do you think? Even real estate goes up and down, right? It's not that the price that you're paid is the best price. Many a times, the prices are lower after a year, after 2 years. That's what we saw in the last 10 years of real estate cycle, which was very flat. So why is it that price fluctuation is considered as risk? Volatility doesn't mean risk. Volatility just means that if you are a smart investor, underline the word smart. If you are a smart investor, you will make the best use of volatility. That's the reason why I started by asking this question saying, how many of you made money in the last 10 days or so? Because that gave you a lot of options. A lot of stocks were trading at abysmally low prices, which I would jump into, and I did jump into. I mean, last 1.5 weeks, while my mark-to-market losses showed significant significantly lesser profits. To be honest, I was also not very happy about it. But what I did was I used this high volatility to sometimes transact by buying low and selling at a higher price or so. That I did very actively between 3rd and 10th of March. While that is a myth that volatility equal to risk, which is absolutely a myth, the fact is inflation is your biggest enemy. I'm sure if you have attended a lot of events on investments now, you would now by now would have understood that आपका सबसे बड़ा enemy और दुश्मन वो नहीं है जो वो प्राइस ऊपर नीचे करता है. The problem is your inflation. Just keeping your money in debt will not suffice. Just keeping your money in fixed deposit will not suffice because inflation is so high. I mean, better than what we used to see, but inflation is our biggest enemy. It's a termite. It eats up all of our gains that we see. The purchasing power keeps falling every year. That's only because the prices are going up every year. Just like the way your salaries, your incomes are going up every year, the inflation is also inching up every year, making the worth or the value of your currency lesser and lesser and lesser every day. Did you get these 2 points, myth and the fact? Myth being volatility is not equal to risk, and fact being inflation is your biggest enemy. Did you get these points? I'll just tab and see. Okay, wonderful, Neetu. Thank you. Wonderful, Tarun. Got it, Shushmita. Thank you. Now, why equity? There are plenty of reasons. Okay, when I was typing this, I could write about 20 reasons saying why should you invest in equity. But then I said, okay, it'll be too much for us to all assimilate. So I just boiled it down to 7 points. First, and the best part about equity, you don't make these kind of returns in any other asset class. Not even real estate, not even crypto. Okay, crypto is not an asset, by the way. In any asset class, for you to generate the kind of return that you get from equity, you need to leverage, which is a evil in itself. Equity gives you the highest return if you invest in the right direction. And as you all know, tomorrow, if you need the money, can you go and sell your real estate? Can you go and sell FD without paying penalty? No, right? But if you want the money tomorrow, when I mean tomorrow in 3 days' time, just press the button. The money is in your account in 3 days. Tell me an instrument which is as smooth as this. Tell me one instrument which can give you such high liquidity. You don't have to look for a buyer. There is a buyer waiting for you to sell, and there is a seller waiting for you to buy. It is one of the most liquid investment or asset ever. As you all know, higher returns would obviously mean that we beat inflation, right? So equity beats inflation, may not be on a consistent basis, but on a longer term basis, it ends up beating inflation by a substantial margin. There is enough logic to understand why. Because what is your real GDP? I'll just go a little away. How does your country grow? One is your nominal growth rate. plus you add inflation. Sorry, one is your real growth rate, plus you add inflation. That becomes your country's nominal growth rate, which today will be at about 14% or 12% or 13%. It is, time will only say, right? So if your country is growing by 13% nominal GDP, the companies that you invest in will grow at maybe 14, 15, 16%. Because if India is growing at 13, 14%, you can pretty much assume that the companies will grow at much faster pace, provided the company is clean and good, right? So when you invest into the company, when you become a part of that company, which is growing at 13, 14, 15, 16%, right? You beat inflation by a good margin because you are the owner of the firm. And when the company grows by 16%, your value grows by 16%, more or less, right? This is how you need to look at equity. You are an owner of the company, and when the company grows at 16%, equity beats inflation by a very handsome margin. On the other hand, the debt being at 6% only ends up touching inflation or generating negative returns because inflation is higher than debt in most cases. That's called negative real interest rate. Fourth, and the most important point, when you invest into an FD, you pay income tax. When you invest into a debt fund for less than 3 years, you pay income tax, marginal taxes. But when you invest in equity for less than 1 year, it is 15%, and for more than 1 year, it is 10%. As simple as that. It is lower than your real estate also. There are three added benefits for investing in equity. First is it compounds. You've heard enough and a lot of stories about compounding, and equity gives you those compounding. See where Infosys, Wipro, TCS, Asian Paints, Bajaj Finance, hundreds and hundreds of other companies are today. They have been multi-bagger. Tell me, I know people say that real estate also gives you returns. Absolutely. But I think equity gives better return. Only thing with real estate is because you invest a large sum, you feel that the returns are also large. But if you calculate the percentage basis, equity will beat real estate by a handsome margin. Equity, on the other hand, also gives you capital appreciation, right? So when you become the owner of the company, it is not just the growth of the company that gives you additional returns, but sometimes people value your company even better because you are a consistent performer and thereby increasing your capital or appreciating your capital. And finally, a lot of people go to equity for dividend because the dividend payouts of, let's say, these IT firms or a lot of firms which don't need the money is so huge that people literally, I know of a lot of people from Infosys who are my clients, live out of it. People from TCS who live out of the dividends that is paid by these good large companies which don't need the money. So these are the three added benefits of investing in equity. Now tell me, if you have any other asset which can beat equity, please type in now. I'll finish this presentation by showing you the best performing assets between 2012 to 2021. If you just notice, okay, real estate has been languishing here. Okay, this source is by Mint, okay? If you see real estate has been languishing here, never on the top. But the presumption is your father, your mother, your uncle, your dada says, भाई real estate में पैसे डालोगे तो कभी डूबेगा नहीं. But देखो बॉस, आपने मतलब real estate के 4.5% return. That is unbelievable. But the good thing is it never gave negative returns, at least yet. In the case of equity, you did see some negative returns here. You saw some negative returns, I'm sure, somewhere, right? So that is always possible that real estate may not give you very terrible negative returns, but equity can give you. But look at the top. Mid cap, equity. International, equity. Small cap, equity. These two are debt, right? Small cap again. International equity again. Equity. So out of 10, 7 toppers have been equity. 1 topper has been gold and 2 toppers have been the debt funds. Real estate has not been there at all. Do you get my point? 7 out of 10 times equity generates good return. And if you invest for 10 years, you will never be able to have an asset that is as good as equity. Over to you guys. Please ask me questions. Okay, question time. How should we know which stocks to buy? Harshit, long-term investment. How to make money? Neetu, one is by working for money, and the second thing is making money work for you. How do you work for money? How does money work for you? By buying good companies, by investing in good mutual funds, by investing in good debt funds, equity funds, and all that stuff. Now, somebody has asked me, how do you know which stocks to buy? I had done a story where I said, please look at those companies or funds which are in your area, which are in your core area of competence. So if you're an IT guy, try and invest in as much as possible in IT companies because you would know IT companies better than the analyst sitting out there. If you are into, let's say, textiles, try and figure out the textiles and industries around or sectors around textiles. So try to invest in companies that you would know, that you understand the basics of it, how it is functioning, is it doing well, is it not doing well. Don't try to time it, but I'm just trying to say core area of competence helps you to make better decisions. That's one of the ways. Of course, if you are into fundamental analysis, there are a lot of other ways, but I'm just trying to keep it simple. Core area of competence, good clean management, good growth rate, and the company has been giving out nice, growing at a much higher pace. If these 4 or 5 factors fall in, you should invest into those companies. Okay. Why is the LIC, Jayashankar, the government itself is going to hype the LIC? It's going to be the largest IPO ever, right? And LIC, right? It is LIC. So it has to be a hype. I don't see a reason why it will not be a major hit. Every individual on the ground, even a chai wala will talk about LIC because it is going to be the biggest IPO, and LIC is a name which everybody can relate to. Identifying which stock to buy is art. More than that, not identifying, because you will identify good companies. Holding that is an art. Tell me how many of you would have bought Bajaj Finance at 1,800 when it fell in 2020, right? You would have identified because it's a no-brainer to buy Bajaj Finance. Forget it. How many of you would have bought Asian Paints last week? Crude oil गिर गया, चलो कोई बात नहीं. Crude oil बढ़ गया, चलो कोई बात नहीं. Asian Paints from 3,200 fell to 2,600 or 400. I don't remember the price. It was no-brainer to buy it, right? You should see the history of Asian Paints. Every time there's a crude oil increase, there is a raw material price increase, what they've done is very smartly over a period of time, passed it on to the consumer. But then when the raw material prices decrease, they never pass it on to the consumer, thereby increasing their gross margin. It's as simple equation. And so what I was trying to say is that it's an art to buy. It's not an art to buy. It's very simple to buy. But the point is, after you buy, what do you do if the price goes down another 5%? That's the difficult part. And in these kind of volatile markets, you will make a lot of mistakes. You will say, oh, मैंने गलती कर दिया, इस market में खरीदना नहीं था, 5% नीचे गिरा. फिर another 5% नीचे गिरा तो आप 10% में exit कर दोगे. Only to realize that after a month, the price of that particular stock is at 3,000 or 3,200. You would have missed a big rally. So art is not buying, art is holding. Okay. Equity means stocks. Equity means stocks, mutual funds. Equity means PMSs. Equity means AIF. Equity is just a source. Equity means you are an owner. Are you direct owners? Via mutual fund, via PMSs, via AIF is something that you can always decide. Stock on loading. Can see you. Naveen, logically, buying a real estate is not a great decision. Logically. A lot of calculation prove us that renting a home is better, but logically. But how many times are we logical? We are also emotional human being. I can show you enough numbers which says that buying a home is actually a bad decision because 1, you're stuck. 2, you pay a lot of interest. 3, the rental income is poor. 4, maintaining it is a pain. Just see those NRI. I have a lot of NRI friends and clients. वो खरीद तो लेते हैं, but बेचने में इतनी मेहनत लगती है. Or rental income क्या आता है 2.5%. Why will you buy an asset? The capital appreciation is not very good. But we are emotional beings. I always used to believe that I will not buy a house. Today, I have invested the largest amount of my portfolio in house. Emotional needs. Just imagine how will you react when your son or daughter comes and says, "Papa, apna ghar kyun nahi hai?" Right? That is enough for you to make all these logical decisions away. We are emotional beings. We will make decisions which are not always logical. So it is logically not correct, but emotionally the right decision to make. Hope you got the point. Okay, I don't know too many. Um, as a 25-year-old Adarsh, how should one go about diversifying the portfolio? Don't try to get into stocks. You are too young right now to understand stock market. All I would suggest is put your funds in equity, 90% of your money in equity, 5% in debt, 5% in gold if you want to, and crypto if you want to. And keep the funds in mutual fund. I mean, don't do this buying, selling, closely tracking, and all that stuff. आपके पास time नहीं है. It's time for you to grow your salary, not your portfolio. Portfolio will be grown by a fund manager. Once you have a hang, okay, this is how it works. I get to see, I've understood XYZ company better. Then you slowly diversify. For now, look at 2, 3 large, good, nice, large cap fund, mid cap fund, and small cap fund. 3, 4 funds are enough. One debt fund, one gold fund. Enough for you. Should not be more than 5, 6 funds. Enough for you. Continue to do SIPs, continue to invest into those funds. And one fine day, when you understand equity well, then shift it to some bit of a stocks or any other asset that you really want to. For now, stick to mutual funds. Do you recommend crypto? Not at all. I have invested because FOMO tha, but I don't recommend crypto. Crypto is volatile. I don't know whether it is risky, but for me, I don't understand it. So for me, it is risky. So that's the reason why risk capital is something that I have kept, and I've parked some 5% in that. And that was at a good price. So I'm still profitable, by the way, in my crypto. I don't recommend it though, because समझ में नहीं आ रहा अभी भी इतना डालने के बाद भी. Negative inflation thing you mentioned. So no, Neetu, what I mentioned was inflation is 6%. FD return is 5%. Okay? You think you're making 5%, but inflation आके इसको खा जाता है. You're actually losing 1%. 6 minus 6 plus 5 makes it minus 1%. You're losing the value of your money. So let's say your inflation is 5% and FD return is 6%. So inflation is eating into it. 5% is eaten away. So you're left with 1%. So you're positive only by 1%. That's how you should look at inflation, real interest rate. Okay, inflation low, interest rates high would mean that you are making decent returns, positive returns, decent real interest rates. But inflation high and low interest, negative interest rates. What about investing not directly but as an LP to the fund? Jayendra, if your portfolio allows you to do it, you should do into companies that are in your area. Let's say if you're into pharma, try to invest in pharma companies. If you know something about technology, in fintech, insurtech, edtech, there are so many tech, you should do it. But if you are very, very strong gut feel about it, do it. Because while everybody looks at the success story, what I've heard is about 99% of the startups don't make it to the second level. So be very careful about it. If you have risk capital, it's worth investing for sure. Gold, Vaibhav, you can buy it in the form of funds, in the form of SGB. I'm not a big fan, but you still can buy SGB, sovereign gold bonds, right? You can do these, or you can buy in digital forms, not in physical forms. Who will go and save and store it and protect it? So these 3 are the options in my opinion: ETFs, funds, SGBs, and digital. Yes, Naveen, good question. Small cases, I myself have 4 small case funds via someone. I do recommend small cases. You should try small cases. It's a good platform. I have met the promoters, very smart thinking that they have. Strategies, you need to do a lot of work. You need to do your groundwork to figure out if the strategies that you're going into small cases worthy or not. In my opinion, there are very simple small cases. Just go and buy. Don't look for EVs and lithium and commodities. There are lots of complex ones. Don't go for it. Simple ones you should try. How to hold stock? How long to hold? Tarun, you should hold a good company as long as the company continues to perform. As long as the management continues to execute. If the management falters, give them some time. धीरे धीरे समझ में आ रहा है कि मैनेजमेंट में उतना दम नहीं है जो था पहले. Slowly then exit. Till then, keep holding into good company, because good companies itself are difficult to find. And if you found one, please be with them as the management is good, right? So you will make more and more money. Been toying around the idea as we don't have to think about it. Which one? Okay, sorry, Naveen, I didn't understand the question. Okay, yeah, got it. Small cases, you should. Do you suggest investing in US stocks? Harshad, India is going to grow much faster than any other economy. You may want to, but I'm not a big fan of investing outside of India. If the world is coming to India, why should we go out? Because India itself will grow at to $10 trillion in the next few years. $10 trillion. We are, India is the youngest startup. I mean, it's a middle-aged startup. You should, if you're looking at startup, India में डालो. इंडिया में डालो, लार्ज कैप में डालो, मिड कैप में डालो, कहीं पे भी डालो, गुड कंपनीज में डालो, you will make a lot of money than investing in US. US is good, but India is far better. I'm not saying this because I'm patriotic. I have to be logical about it. I believe India's growth rate is faster than a lot of other countries, so I would stay put in India. Hedging, Om Prakash, okay. In mutual funds, how to hedge gains in a falling market? You cannot. The only way to hedge, at least yesterday, I figured out that there is a strategy in Nifty, but I don't know how liquid it is. It's called inverse Nifty. In the sense, it's like selling the Nifty. So if there is liquidity, you may want to buy it. It's called inverse Nifty. अगर Nifty नीचे जाएगा तो आपको उसपे पैसा मिलेगा. So you can just go and buy it for the number of amount that you have in mutual fund, right? So you have mutual funds for 100 rupees and you want to protect the downside, go and buy this. It will help you to hedge the position, right? But I don't think there's anything other than this in the liquid markets. But if you want to do in, let's say, via debentures, there are a lot of capital protected debentures that come, which gives you the upside of Nifty, but protects your downside. But then that's got credit risk. I mean, it's a little complex, so too short a period for me to tell you about, convertible debentures or capital protected debentures. The other way is go and sell futures, right? You can sell futures. It may not be a perfect hedge, but at least it'll give you the market, it'll take the market risk out of it. But I mean, it's not a perfect hedge. So you may want to just think twice before doing all this because it requires additional capital, Om Prakash. So it's very difficult to really think, अगर market गिर ही रहा है, आपके पास जो additional capital है ना, वो market में डाल दो. That itself is better. Hope you got my point. Adarsh, okay, is a good time to buy stocks. Oh, I recommended buying stocks on January 1st. Forget today. Is it still falling, right? Oh, falling is fine, right? Why? Who said that if you buy the stock, when you buy the stock, it will not fall? You are not a timer at all. Nobody ever in the world is. You will buy, it can fall, it can go up. That's not in your hands. All that is in your hand is to buy good companies. If you buy a good company and if it falls, it will jump faster. So in a good company, it's always a good time to buy. Abhi to aur bhi sasta hai. It is like a sale. Shirt mein sale hai, pant mein sale hai, Flipkart ka sale hai, Amazon ka sale hai. Like that, India is available on sale. By the way, the long-term averages, let me show you something. The long-term averages have come down for, long-term P is right now lower, which is very good for India, right? The P that we were paying has come down so drastically down. Let me just show you something, 1 second. Okay, where did it go? 1 second, guys, sorry. Yeah. Okay, I'm going to show it to you now. Let me know if you can see my PDF. Can you see my PDF? Please let me know. Okay, great, Jayendra. So if you see here, the long-term average of 10-year average of Nifty valuation has been about 19.3x. Okay, it went up in 15, came down. It went up in 17, 18, came down a little. 20 before the COVID, it was very close to 24. Then it dropped down to 16. फिर ऊपर चला गया. If you see the average line is dotted line here, and we are below the 10-year averages. Is it the right time? Of course, yes. I recommended it here also. I recommended it here also. I recommended here also. But will it come down from here? That only time will say, right? So don't worry about the downside. Look at the upside. That's my only submission, guys. Hope you got the point. We are trading below 10-year average, 1 year forward peak. Okay. Next to the question. Okay, do you think recommend angel investing as a good equity investment? If you know the firm, if you believe in this firm, and if you believe you have risk capital now, please go ahead and invest into them, because you in life you need to take some kind of a risk. So angel investing is good, provided it doesn't dent your portfolio much. If you have a 10 lakh portfolio and if 50,000 rupees goes off, it is still okay, right? Example. But if you have a 10 lakh portfolio and putting 5 lakh into it, I would not recommend. So it depends on the kind of quality startup that the kind of allocation that you have towards startups. How much money you bet for the fund manager? Tarun, I didn't understand the question. What do you mean by fund manager? How much money do you need? While you respond to that, let me just see. I was surprised that you're saying that equity should not be interested for. When did I say, Harshit, that it should not be invested for 25 years? I said, I never say no to equity even at 50 years old, Harshit. I am very, very positive about equity. So if you are a 40-year-old also, put all your money in equity. It's not at all risky. Equity is not at all risky. आप फिर बोल रहे हो कि it is risky at this age. Not at all. It is not at all risky. Not investing in equity is risky. So for 25-year-old, it is definitely always recommended to invest in equity. Forget 25-year-old. Even if you are 45-year-old, you should invest in equity only. As an allocation should be substantial enough. I hope I got it right. Invest in equity. Not investing in equity is risky. That's a whole session about. Do you keep money in FD? Not at all. Just zero money in FD. Some money for emergency fund, which everybody has. 6 months. Sorry. 6 months of money in FD, 6 months of, not in FD, sorry, liquid funds and all that stuff. No money in FD, not a big fan. Tax bharna padta na bahut zyada. So not a big fan of FD. Pratik, my portfolio is 2. I have only 2 stock portfolio. I have other PMSs, mutual funds and all that. My stock is only Bajaj Finance and PVR. And I have told this many times on this forum. I believe both these companies are good. And I don't want to go too much into stocks because I don't understand too many things. So I'll just stick to what I use. So I like these and I invest into these. Simple as that. Okay, thank you, Neetu. What are your thoughts on Forex investing? Definite no. Anything that is trading, I would not want you to spend your time and energy on because I've not seen too much success with whatever I've had 20 years of experience, 19 years of experience. Not many people make money, so why go the wrong way? Well, it all looks fancy. Crypto, angel, Forex, all look fancy, okay? After 5 years, you would realize, oh, wish I had not done this mistake. By the way, I've done all those mistakes. That's why I'm saying out of experience, plus also out of learnings, that don't invest into all this. Equity boring hai, but boring mein paisa hai. So Krupa, yes, there is an index. There is a strategy called reverse index. You may want to check, but I don't think there's a liquidity yet. This is a nifty strategy that is there. You may want to just try it. Let me see if I have data about it. If I have it, I'll let you know, guys, in the next session. But for now, I don't have the data. It's called inverse nifty, reverse nifty or inverse nifty. If you give me 1 minute, I'll let you know the exact name while we. Okay, the next question. Can't see, it's too small. Sorry about this. Minimum investment with fund manager. Fund manager, mutual fund guy is a fund manager only, no? 5,000 rupees में भी आपका पैसा वही संभाल रहा है. 500 rupees में भी आपका पैसा वही संभाल रहा है. There are good, learned, very nice fund managers. You should just give your money to them. When I mean them, via mutual funds, right? So there are so many nice, learned fund managers. You invest via mutual funds and they will manage your money. But you said don't invest in equity stocks. Okay, got it. Harshit, I said the easiest thing to do is mutual fund. I'm not saying no equity. I'm saying no stocks, direct stocks, buying stocks. Okay, because stocks involves a lot of analysis. And I believe that you should get into equities via mutual funds, at least till the time you get a good hang about stocks. Once you understand stocks, you may want to put newer money into stocks and keep equity mutual funds stable. Hope I got it right. Any interesting asset class you have money in? Yes. No. Watches, no. Watches, cars, no. I have in unlisted companies. Okay, Rashmi, I have in good companies like CSK, Chennai Super Kings, Tata Technologies, Reliance Retail, HDFC Securities, HDB Financials. So these are my unlisted gems. I'm planning to write or cover up I mean, I have a YouTube channel called Anand K. Rathi. So in that, I'm trying to cover this saying how to uncover unlisted gems. So that is my interest. Oh, I have made decent money on all of them except for one. Shrika is if so, what are the best debt funds? So best debt funds, depending on the tenure, I think you should still go for credit risk fund. I think because the credit risk will improve, credit risk situation will improve going forward. So you should go in for 3+ years, then you should go in for a credit risk fund. I think interest rates will be around the same levels. We go up a little bit here and there. 10-year may be at the same levels also because RBI wants to maintain the interest rate at these levels because it has to boost the consumption, right? It has to boost the offtake. Credit offtake has to start. Where are only the government is spending? Where is the private company not even setting up factories yet, right? उसको boost करने के लिए interest rate को low ही रखना पड़ेगा. So I think interest rate may not go up very high. It will still go up, but not very high. And the long term ones will remain stable. And then this should push credit offtake higher. Can you give any stock tip, please? What to buy? So mine is Bajaj Finance and PVR is my portfolio. I can't recommend because I don't have the license to recommend. What I did in the past, in the last week or this week, I bought Asian Paints because I thought raw material crude hai, no doubt there's some chunk of it, but you cannot just thrash a company like Asian Paints because crude oil is at 130. Fortunately for me, after that also it went down. Okay, it kept going down and down and down. I kept buying, and I made a decent trading profit out of it. My favorite stocks are Bajaj Finance and PVR, Naveen. PVR. And please go watch movies only in PVR because I am holding PVR stocks. But I think both these businesses are good, guys. Bajaj Finance and PVR. These are not my recommendation because I can't recommend. These are my stocks which I hold. So I'm just trying to see the last one on the Nifty, which was the reverse one. What is the exact name? Just give me 1 second. It is called. Okay, what is it called? 1 second, sorry. Just any last question before we call it? Any feedback that you guys want to give, please feel free to do that. Nifty TR1X. Yeah, it's called Nifty TR and PR1X, one of this. Okay? No, Jayendra, no. I had an argument with my partner today saying PVR, Netflix may not outdate PVR. I mean, would you like to watch a movie like RRR? I don't know if you are from this part of town, but today there is no, even Pushpa was a big hit. Just imagine paying just 250 rupees or 300 rupees to watch a movie like RRR on big screen. Watching a movie like Spider-Man on big screen. Can you get that experience on watching that small dabba TV that we all have? No, right? RRR is a movie, Shushmita. Okay. Then I don't think you would go to PVR. Just imagine, right? So you don't go to a mall only to shop. You don't go to a mall or a food court only to eat. You go to a mall to shop, eat, and end your day with a movie. We are middle class people, right? Middle class people don't have too many options. You can't go on vacations every day, right? You will have to step out. Your son has to step out. You or daughter has to step out. She will go and take you to a movie. That's where you will end your day with, weekend with. So this is good, Anish. You should go only to PCR. This is more of a older people. No, Harshit. I don't know. Maybe I'm not old. I'm only 40. But I mean, I went for a movie, a Tamil movie, a couple of weeks back. The average age was about 27, 28. And this was a movie on a Wednesday night show. So I don't think it is going to be outdated. So it's good that you think it's going to be outdated, but I don't think maybe the number of movies that you're going to watch will come down in the theater because you will have Netflix. Like my partner was saying, people will wait for it to come on Netflix and watch. That kind of a movie you'll watch on Netflix. But big movies, just imagine Bahubali watching on that small screen. Will you enjoy it on the mobile phone? Just think. Okay, Gen Z loves going movies. So Gen Z is fine. Gen Z is Gen Y is millennial. Gen Z is the next. Everyone loves going to movies. I don't know whether you'll go to the theater, but I think you're right. It may be Netflix and all these OTT platforms are a good threat, but over a period of time, what will happen is movie going experience itself is different, right? So you will a PVR and INOX have to entice you to come, and these big movies will make you come, right? If you're a Shah Rukh Khan fan, which I am not going to watch a movie on small screen, come what may, right? But I'll watch a smaller, not a big, large heroes movie on small screen, right? So, any other last question before we call it off? So it's called Nifty TR1X or PR1X, guys. Just watch for it, and if there's enough liquidity, you should go and buy if you want to hedge. If you want to hedge. Great. Thank you so much. I think I'm done with the questions. And if you have anything, please feel free to follow me on LinkedIn, on YouTube, on Twitter. I'd be happy to answer your questions offline also. And let me come back with some interesting topics for the next coming days or so. Nifty TR1X. Okay, I think let me just get you the right one. Just 1 second. Sorry. I'll finish off because it's an important information with this. Any other questions? Because there's some. Just one last minute, index concepts. I can always say that you come next week and only then I'll tell you, but I'm not going to do that. Okay. Yeah, it is called Nifty 50 PR1 inverse index. I'm just typing that out for you guys so that you can just see, but I don't know if there is any, not against crypto. Thank you, Rajat. Thank you so much for, thank you, Sushmita. Nice. Can you please drop in the chat? I have dropped it, Harshit. I'm not against crypto. Boss, Tarun, let's have an offline discussion. And if I understand crypto, I'll invest into it. I don't understand, so I am not investing into it. Right? So, for example, you may believe that XYZ firm, company, even an equity is good, but I may not believe so, right? So we will always have disagreements, and that's how there's a counter view for anything that you have. You may say that equity is all crap, you should only invest in debt, and you may be right about it. That's your view. So I'm not against crypto. I don't like crypto as much. So I don't understand. So if you don't understand, why invest into that? Well, will you go into a dark room, into a dark zone in a area without a torchlight, right? So avoid those kind of dark areas is all I'm trying to say. Great. Thank you so much, Adarsh, Anish, Tarun, Anand, Shushmita, Arshid, all of you guys for asking me wonderful questions. Thank you, Rashmi and Jayendra, Naveen. So I look forward to seeing you in the coming sessions or so. Please feel free to follow me and write to me on LinkedIn. Good luck. Bye-bye. Thank you, Adarsh. Thank you.